Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equities set for a lackluster final week of 2023. Trend trading might eke out slender gains for the session. Nifty indicates a start about the 21,400 mark with slim gains. Talk about the global equities or the global setup. US shares ended mostly higher ahead of the festive holidays on Friday, and Asian markets in today's session gave up initial gains amidst thin trading volumes. Do bear in mind the fact that cooling US inflation data bolstered bets that Federal Reserve would cut interest rates sooner. That's also one thing that is weighing on the optimism of the markets right now, or rather underpinning the optimism right now. FIIs, they've been the net sellers to an extent of 2,828 crore, and DIIs too have bought an equity to an extent of 2,100 crore. Talk about FNOQs, well, FIIs, they've been the net sellers in index futures. However, they've been the net buyers in index options along with stock futures, and also the buyers in bank Nifty options. That's where they've been buying. And if you talk about the ban, the new in ban, the stocks which are new in ban is National Aluminium Company. Along with that, that's Nalco. Apart from that, we also, what still remains in the bank is Ashok Leyland, India Cements, SAIL and Balrampur Chini, along with Delta Corp, Hindustan Copper. Talk about what comes out of the ban is Manappuram, along with that RBL Bank. Well, let's talk about the option Qs. Nifty PCR, that stands at 1.18 versus 1.11. Let's get going with the strategies and the top recommendations of the day with Brijesh L, who heads technical and derivative retail research at IDBI Capital Markets and Securities Limited. Morning there.
Yeah, morning, Nickey. So let's start with the Nifty. So I think Nifty is going to be a range for the next current week. I believe 21,600 might act as a resistance only for the week. But then having said this, we are extremely positive on the market. I believe this 21,600 will be taken out post monthly expiry. The view is positive toward 22,000. So 21,000 to 22,000. That would be the range for the Nifty for the next couple of days. From the immediate expiry point of view, I think 21,600 will act as a resistance. Lower side 21,000 is the support zone. So immediate 500 points range and larger 1,000 points range. This would be the range for the Nifty. Bias will be positive. Anytime, whenever it corrects close to 21,200, 21,100, we'll be looking for adding the long position, stock specific long. Metals are the sectors which are looking positive. IT is a space, realty is a space. So within this space, we'll be looking to add the long positions. Coming to the bank Nifty, 48,000 is the resistance zone. During the entire week, we saw that 48,000 has been acting as a resistance, and at 48,000 there is a lot of call writing as well. But having said this, the view for the bank Nifty is also positive. 46,000 and 50,000. This 4,000 point is the range for the bank Nifty. I believe post expiry there will be a short covering in the bank Nifty. Data is extremely positive. We just need a confirmation above 48,000. So if we see that, I think Bank Nifty will be heading close to 50,000 mark.
Sure. Brijesh, that's not what I was going to ask. I was actually going to ask you, how did you spend your Christmas and how lackluster this day looks amidst the last week of 2023 and after the long week that we've had, or let's just say weekend that we've had. In light of that, okay, also coming to your strategies, what do you make out of something like in Infosys? Apparently, that's going to be a stock which was expected to be in future a bit of negative development there, cancellation of a big order coming in from a global client. How do you read that, and how can one look at in terms of the strategy for Infosys before you go on and tell us what we can do about Bank Nifty?
Sure. So Infosys, somewhere I think technically the weekly and monthly time frame is extremely positive. I think anytime when it corrects close to 1,500 to 1,450, I think that's going to be a buying opportunity, because we believe 1,700 plus is what is due on Infosys from the trading point of view. So whatever the bad news come, I think close to 1,450, it's again a buying opportunity, and we'll be we should be talking of 1,700 plus on the Infosys from at least from next 10-15 days point of view. So we would remain positive.
Okay, that's the word coming in. We're going to be discussing about Bank Nifty also in just a jiffy with Brijesh, but let's talk about the opening for the markets. it is a flat start, a nothing sort of a start coming in for markets, and it's not here near that 21,400 mark. Right now markets are trading at the 21,330 odd levels with slender gains of 0.1%. Well, it's just yo-yoing between the negative and the positive territory. It is a flat start coming in for the markets. Let's talk about the Bank Nifty. How is that shaped up? Well, Bank Nifty is also got off to a rather lackluster start, I may say. It's a flat start coming in there. So that's also something that you need to watch out for. Bank Nifty, again, a flat start along with Nifty. Talk about the mid cap and the small cap indices. That's also something, well, a bit of outperformance there for the mid cap counters. 0.2% of gains coming in for the mid cap index, and small cap index gains to an extent of 0.4% thereabouts. Let's also talk about the indices performance, right? Something in the like of PSU, Realty, Metal Basket, just like Brijesh was pointing out. Nifty IT, of course, is the one that we need to watch out for, and the cuts are sharp for Nifty IT index right now. 1% down and out for Nifty IT index. That's on account of the development of Infosys, which is expected to be the stock of the day. Well, whether it's a buying opportunity, whether we have bottomed out or not at this level is something that we need to watch out for. But Nifty IT right now, well, taking it to the chin, and 1% odd loss coming in for that basket. Let's talk about the other sectoral indices, Nifty Realty and Nifty Metal. Of course, we saw good amount of gains coming in for Nifty PSU Bank Index, but Nifty Realty also, it's a flat start coming in for that one. Nifty Metal, let's look at that one, if there is some amount of traction building in for Nifty Metal Index. Yes, PSU Bank and Nifty Metal, they are mustering in some early gains. Let's talk about the top gainers and the top losers that we have overall, just to see where the momentum is stacking up right now. Well, it is a lackluster start to the day, and something that we'd like to watch out for: UPL, Tata Steel and NTPC. Well, these are some of the top gainers that we have: Tata Consumer Products, Bharti Airtel and Eicher Motors. Well, these are some of the other top gainers that we have for today's game: ONGC, Britannia and Ultratech Cement. Well, these are some of the other top gainers that we have. In terms of the top losers, let's look at that. Well, losers is something that we need to watch out for, especially given the bunch of IT names can actually make it to the list. That's something that we need to update and probably watch out for. But right now, the market breadth seems to be pretty lackluster. 38 advances versus 12 declines coming in for the markets. In terms of what are the losers, no surprise for guessing there. Infosys is the top loser. Wipro is the top loser. HCL Technology is the top loser. TCS. Along with that, we are also looking at Tech Mahindra, ICICI Bank. So it's the entire IT pack which is washed out in trade. Coming back to you, Brijesh, IT stocks clearly the theme of the day and something that we addressed well ahead of the market's open also. Infosys is what you spoke about, but in light of the recent correction, let's just say some amount of profit booking which has come in early deals, do you think the index is now bottomed out? And if that's the case, which is the stock that one can be looking at from these levels?
Specifically, as I spoke for the Infosys, I think this slightly a profit booking. Recently, there was a good amount of rally in the Infosys, and that rally has started from 1440 levels. So I believe 1500 would be the reasonable, some retracement point also. So I don't feel this correction go beyond 1500. So anytime when it comes to 1500, I will hold on to my original view, and then I will start accumulating Infosys at those points. And if I do look at the market, I think market is the stocks like Canfin Homes, metal within the metal space. Jindal Steel is something which is picking up the moment. As you said, UPL is also looking good on chart. So I think it would be a more of a stock specific trade for the market, and I think it will be sideways to positive is what I believe.
Okay, Brijesh, we are going to get back to you in just a jiffy. Let's address the stocks and news first, because there are a couple of developments that I'd like to probably talk about. Infosys is the one that I already indicated. Global company has terminated an MOU with Infosys. The parties will not be pursuing the master agreement. Infosys was to provide enhanced digital experience and also was to modernize business operation services, leveraging on Infosys platforms and AI solutions. The total client target spend over 15 years apparently was estimated to an extent of $1.5 billion. There is one thing that I'd like to highlight for this one. This particular order was not added in the Q2 TCV whatsoever. So it was not factored into the financials per se or not accounted for. So there is no major blow which is expected to come in on this one. But of course, in terms of the sentimental impact that we're looking at and the kind of environment that the IT space is completely sharing for the last 3-4 quarters now put together, this definitely doesn't augur well. Let's talk about the other few pharma names that we have on the list. Aurobindo Pharma, US FDA has issued in 10 observations for subsidiary Yuga US Manufacturing LLC. Now, US FDA has conducted a pre-approval inspection at the new injectable facility during December 11 to 22. The inspection closed with 10 observations. The observations are procedural in nature and will be responded within the stipulated period of time. That's the word coming in from Aurobindo Pharma. But right now you can see that the plant is yet to start even the commercial operation, and that's where the knock is coming in for. Almost 1% gone on that one. Zydus Lifesciences. US FDA has also concluded an inspection at the company's API facility with 6 observations. This inspection was conducted between December 14 to 22. Well, no data integrity, no observations which relate to repeat observation typically has been found out from this inspection, and right now the stock seems to have started on a flat note thus far. UPL, well, the board has approved in the fundraising plan to around 4,200 crore through equities or right issue basis, and it is one of the top gainers that we have. RIL is of course something that we need to talk about in a bit of details because of the Disney contract that has come in. But of course, that's a development that we've already seen on Friday. But this is just to see if we can see some amount of further momentum coming in from RIL, essentially the index heavyweight, which to an extent is garnering or lending some support to the markets. Tata Steel, where the shareholders will be meeting on Jan 25th to consider a scheme of amalgamation between the company with Indian Steel and Wire Products. Well, listings, a couple of them that you need to watch out for. Suraj Estate Developers is going to be one of them. Apart from that, the issue price was fixed at 360 per share. Motison Jewelers, that's going to be an interesting one. This is a company which is full of corporate governance issue, promoter track record, but has got a bumper subscription. So that's the largest number that we've seen in the IPO season, at least 4th or 5th. It ranks at that level when it comes to the subscription. That's the kind of demand we've seen for this one. So, it's going to be interesting to watch out at what premium we're going to be looking in for this Jaipur-based jewelry retailer. The issue price has been fixed at around 55. Muthoot Microfinance, another interesting theme. That's also going to be listing in on December 26th. These are few stocks that we like to watch out for. But Brijesh, coming back to you. Within now, RIL is something that I'd want to chat about. Some amount of support has been lent in from RIL. What do you make out of that? Immediate support and resistance level coming for this one as well?
RIL looks like it looks positive on chart. Previously, I believe levels of 2600 is the resistance zone. I think some amount of profit booking of some resistance might be seen, but then gradually, I believe this level will be taken out. Maybe for the next couple of days, 2600 and the lower side 2550. So this 50 points would be the range for the RIL. Whenever it moves about 2600, so I think a fresh another 100 odd points will open up on the higher side. So about 26, we can talk of close to 2700 on the upside. The immediate range would be 2550 to 2600.
All right, Brijesh, we're just going to leave it at that. And thank you for taking out the time and having this conversation with us. All right, joining us next is Anish Tawakley, who's the Deputy CIO Mutual Fund Manager at ICICI Prudential. Morning there, Anish.
Good morning, Nickey.
All right, I'm just going to straight up start by asking you, with a market like this, the last week is expected to be a little lackluster. For someone who's not deployed in the money thus far or is looking to enter into the markets, what do you think should be the strategy for such investors? Should they need to, probably wait on the sidelines now for the markets perhaps to correct a little more, or they can go on and buy on to the large cap stocks?
Yeah, so firstly, I would not like to give anything less than a 1 year outlook. The weekly movements, etc., can be volatile. Our view is that broadly, if you look at the economy is in good shape. And from here, if you take a longer term view, the markets should basically follow earnings. And therefore we are expecting a reasonably good market outlook if you take a 1 year view. Within that space, though, we have a strong preference for large caps. We think that small and mid caps are a bit overdone, and the risk return trade-off is clearly better in large caps.
Okay. So clearly also the mid cap to small cap, if you look at just a market capitalization to GDP ratio, you're looking at a number which is almost closer to 2007, with some of the experts perhaps even indicating a crash-like scenario. That's also some amount of fear which is now looming into the markets. What do you read into situations like that? Sure, you've given a preference of large caps, but what do you think about the small cap and the mid cap indices? Are you better off staying from those space altogether? And within the large space, what do you like?
Oh, so clearly we prefer large cap over small and mid caps. I mean, we can see there's almost a frenzy in the IPO markets, and that is normally a red flag for us. Right? Now, within large caps, given that our view on the economy is positive, actually not just our view on the Indian economy, but overall our view on the global economy is also positive. We prefer domestic cyclicals. So these are sectors like industrial and capital goods, cements, automobiles, and parts of financials. I mean, normally I would have said all financials, but at this point we're not so positive on banks. We are positive on other financials apart from banks. So basically what we like is industrial and capital goods, cement, auto, and non-lending financials.
Okay. But why not positive now on banks? You think much of that has already been factored into the stock price with the recent run-up that we've seen, at least for PSU banks? I mean, private banks have just started to catch up, at least when it comes to the stock price performance in the last
our view is that the intensity of competition in the banking system is very high. So while in a recovering economy, banks normally would see good growth, the intensity of competition is extremely high, particularly on the deposit side. And that kind of caps margins also puts pressure on cost to income ratios, because banks have to expand networks to gather deposits, etc.
Okay, that's perhaps a bit of contra view there, because banking is something that most of the, I think most of the fund houses perhaps also have, been pretty invested in. But of course, this seems like a change of tide there. Of course, what do you make out of the current IPO names, which you just mentioned that, it seems like a red flag when you see so many IPOs floating into the market and the kind of premium that they demand also. For instance, you saw Motison Jewelers, which is going to be listing in today, and experts, at least the GMP signals a 100% gain coming in from the issue price. And there are a bunch of other names for that matter. We also know that there is a sense of corporate governance issue or promoter track record also seems to be a bit of iffy in that case. Within the IPO space, is there anything that you're looking at or any theme per se that you can talk about?
So firstly, I can't talk about individual stocks, so I would not like to comment on any specific IPO. Yeah, we evaluate everything, but at this point we are finding fewer opportunities.
So when you say pure opportunities, which theme are you? Fewer opportunities. In that case, where are you looking at? Is it more got to do with the microfinance names, jewelry makers, or for that matter, what's the kind of mix that you would prefer over other companies?
So in general, as I said, right, we have a preference for domestic cyclicals. Right? And then in the IPO space, it becomes completely a company-specific evaluation of the track record, the history, etc. And then like you see if it fits with the sectors that you like. But see, while you like sectors, that doesn't mean that you stick only to those sectors. So really, it's a company-specific piece. We're not really looking for themes in the IPOs.
Okay. Let's talk about, also I wanted to chat about this banking view that you suggested, that you're not really very bullish on that. Correct me here if I'm wrong and the logic seems to be a little twisted to you. where I say that, FIIs, if they were supposed to come back into the markets midway in the run-up at the start of 2023 or in the run-up to general elections, bank and IT would be the first candidates to see some amount of traction. On back of that, do you think it's an advisable idea to go ahead and pick some of the large cap names both in IT as well as banking basket?
See, ultimately, if you take a longer term view, not whether what happens 1 month or 1.5 months later, flows are volatile, right? FIIs may come in 1 month, exit another month. So ultimately, what you have to look at is the earnings outlook, right? And earnings outlook for banks, as I was saying, is a little bit constrained by the extent of competitive intensity you have.
So for a year, what is the kind of target from a 1 year perspective? What is the kind of target that you see for the equity markets? I know it's quite a very near term question that I'm asking, but as also at the same time, do you think FIIs will make a comeback in a big way in 2023?
24, you mean, I guess.
2024.
So actually, look, straightforward answer is I'm not allowed to give targets, and I wouldn't like to do that. But basically what I'm saying is, look, we are at a point where multiples are slightly on the richer side, but not excessive overall. And when multiples are in this zone, right, you get returns from two sources, right? Either multiple expansion or earnings growth. So I wouldn't play for multiple expansion. Multiples are reasonable, and returns should follow earnings growth. And in a healthy economy, you normally get reasonable earnings growth.
Okay, so the next question in that case is, how do you expect the upcoming earnings season to be, and which are the themes that one should be looking at?
Yeah, so we expect, as I say, right, the likelihood, when I express a sector preference, that's based on the fact that I expect healthy earnings growth, right, or earnings surprises, positive earnings surprises in categories like cement, industrial and capital goods, even automobiles. We should see healthy momentum and earnings growth. We are less positive on some of the FMCG space, for example. I think volume growth is lacking there and is likely to remain weak. So that's basically the skew, right? Domestic cyclicals, we can see earnings upgrades, other sectors less so.
Why don't you put this in pecking order for us for the upcoming earnings season? Where do you see major earning upsides coming in from? Cement, industrials, auto, non-lending and capital goods. These are some of your preferred plays, right? So how would you put that in pecking order as per the earning expectation that you have in the upcoming quarter?
Oh, so I think industrial and capital goods would be the highest, then cement, then automobiles.
Okay. I also wanted to chat with you about IT space. We're really trying, the market is trying hard to find where the bottom is. And every quarter you see outlook which comes up or commentary which again paints a very gloomy picture for the sector. Even in today's session, you had Infosys, which is not doing well, along with bunch of other IT names, after there was a cancellation of a big order coming in from a global company to Infosys. What do you make out of the IT space? Do you like that space? Do you think it's bottomed out? Value buy there?
So we are not particularly positive on IT. We are, I mean, if you look at our published portfolios, we are slightly underweight on IT. Basically, look, there are two things that had happened, right? One is during COVID, there was a lot of activity, perhaps abnormally high activity in that space, and that created exuberance. So valuations had gone up too much. Obviously, they have corrected from there. The challenge the sector is facing is one, there's obviously captives that are growing very fast, and that's encroaching on some of their growth. And secondly, look, the reality, right? If you look at the global IT sector, IT services sector, right? It broadly grows in a 3 to 5% range. Right? That's the sector growth rate, IT services sector over a long period of time. A bad year is 3% growth, a good year is 5%, right? And the Indian players gain some market share, so they grow a bit faster. Now, as you grow larger and larger, the market share gains become more difficult to come by, and the same amount of market share gains then contribute less to your growth. What I'm simply saying is, if you're 5% of the market, you gain 1% market share. You grow 20% faster than the market. But when you're 20% of the market, right, and you gain 1% market share, you grow only 4% faster than the market. So I think that is basically the challenge. The sector has matured, and some of the exuberance that got built in during COVID is kind of disappearing, and therefore it's not likely to be a particularly exciting sector. You should see kind of nominal earnings growth.
Anish, I'm not exactly going to pose a very exciting question to you, but it's something that I'm sure most of the viewers would want to know. With the IPO market now being in a very euphoric stage, there was 2008 when IPO market was in the similar stage, and we saw some amount of correction which came in. Do you expect similar scenario that we've seen in 2007-8 to now play out for the equity markets before there could be any amount of upswing in the general elections?
So, see, 2008 also what happened was a global financial crisis. So it was not just the Indian IPO market. And to be honest, we don't see that kind of risks built up in the global economy or in the Indian economy. Right? So we are not kind of predicting or preparing for that kind of a crash in the portfolios. It's just that, look, at this point, when you see overexcitement, what we do is we move the funds to higher quality stocks with a larger track record, where we've seen how managements, promoters behave over a period of time, rather than take big funds on very new stocks which have limited track record and stuff. So I would say we are being very cautious on IPOs, but that's not because we are expecting an overall crash in the economy or anything like that.
Okay, so do you have a positive view ahead of general elections? Do you expect the markets to remain perhaps building on to gains? What's the sense of direction one can make?
Well, I think markets will follow earnings, right? I think there's enough investor interest both India and domestic, both in India and globally, for markets not to be particularly weak, even if there are elections impending. And markets will follow earnings is the best way to
perhaps
think about
look at it. Well, Anish, point well taken, and thank you for joining us this morning. It was indeed a pleasure chatting with you.
Thank you so much.
Pleasure. Well, that's all that we have in this edition, but with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.